Hello, this is Itai Levitan doing an analysis for Forex Live and looking at if is Tesla a stock, is it a buy? Now, we're right after earnings of last night. It's dropping approximately 7%, which is a very healthy drop. And I'm looking at an opportunity for extreme dip buying for the very patient investor in Tesla stock, and I'll be showing a huge 12 to 1 reward versus risk on this plan. You need to be very patient, and maybe your orders will fill, and maybe this trade works out. I think it's a very attractive trade plan with a high probability and a high reward versus risk, which is usually not the case. It usually don't go together. But here, the probability of all your orders to be filled is not trivial and not super high. But if they fill, it becomes a very nice trade. So the whole logic becomes I'm looking at this range. I'm looking at this range of between 100 and 400. 414.50 was the all-time high, and the beginning of price started getting into this range on August 2020. It also tested the bottom of the range, close to 100, on beginning of January. That was an extreme dip opportunity. And this price action and the activity is defined through this volume profile where 70% of the trading activity occurred between these two blue lines. This is the value area high. This is the value area low at around 162 and a half. And I'm basically waiting patiently, which may be several months, for price to possibly get there. So for example, if it does something like this, okay, gets to that, it fills my first order. It might even pierce to the downs, filling my second order. Okay, my first order is 163.77. My second order is 157.73. Those are buy orders. And if you can see this value area high node, I'm also setting another buy at 142.78. And also I'm looking at these two lows of the August, the openings more or less, the opening of October 2020 and the close of October 2020 and the opening of November 2020. So that is my final buy at 131.70. Most chances it won't get there, but if it does, I'm averaging out a better entry point. I will also have a stop loss, you will see, because all these orders, if they fill, then the average entry point is the one right there, and you will see it in the plan, which is set here. Okay, so we have the first buy 163, second one 157. You can later, this is a fourth buy. You can later follow and copy these numbers if you want at your own risk only. And this is the average. In this case, the weighted average is also the average. So we have an entry of 148.82 if all of these get filled. Okay, this example shows buying 25 shares at each one of these price levels. And then the average for the full position, the average becomes 148.82 per share, and that brings your position to 14,882. The stop loss is set at 5%, and the reward versus risk is this is wrong. This needs to be adjusted because we are going to something more to higher, and you will see here that we have at our 197, we have a 32.46 upside. So let's set it accordingly. Where is it? It's right here. Sorry. So we need to set the 197. We need to see this 32.46. We need to set it at here 32.46. Okay, and also the stop needs to be 140. Sorry, In this case, it is 5%. Sorry. So yeah. So we have a bit more than 6 to 1 on the first trade, but here we're only taking out a third. Okay, so if the stock price drops after your average entry is 148, it drops back to 141.38, you're out. It's gone. It's done. You're done. Okay, we always have to have a stop. Otherwise, our first take profit is 197.13, where you're taking off one third. Okay, one third of the position. So one third of the position. Let's go back to the chart. Sorry, there we go. Yeah. Okay. So one third of the position would be 33 and a third. Let's say 33 out of that 100 shares full position. The second take profit point is this. You see this red line? This is the point of control. This is where the most of the trades uh, took place in this entire region and this entire trading range uh, since uh, since summer of 2020. Okay, so that's a very significant uh, uh, key level, and it can also serve as a price magnet once uh, the price either gets out of the value area and re-enters it, or finds a rebound at close to the value area low. Okay, it can easily uh, be attracted later to this price magnet, and that is our second uh, take profit. And you will see it is at about 238. Okay, and that will give you a 12 to 1. You're still having the stop loss at the same level at 141.38. This is according to this example. Others can use a trailing stop or raise their stops, etc. If you raise your stop, by the way, you have this developing POC at 195. So you want to be under that. Even if you raise your stop, let's say the price goes above 200, you want to keep it at about 187. Uh, yeah. So, and later you can also go for the value area high. So one third of the position, the last one, you're saving for the value area high or just above, just below it. Okay. And here we have over 18. So that is already a 90% upside, and you're risking 5%. So third of it went for 6 to 1, a third of the position 12 to 1, and a third of the position went on 18 to 1. So the average is 12 to 1 reward versus risk. It means you're constantly risking 5% to aim for 12 of that, so 60%. Okay. Uh, this is actually a very realistic plan. I know it's not for the one looking for immediate gratification, but do consider it at your own risk, and only do return to Forex Live for additional perspectives and views. And thank you.